Welcome to the Infinite Wealth Podcast. I'm Cameron Christensen along with our co-host Anthony Faso. And today we're going to be talking about 529 plans versus the infinite banking concept.
I'm excited for this podcast because this topic is very near and dear to my heart because I've had 529 plans and policies on my kids. And at the end of through the podcast, I'll tell you why I got 529 plans on my kids, why I'm glad I did, and why I would not do it again.
Ooh, I look forward to that. Yeah. Just briefly, 529 plans, there's two types of those. There is a prepaid tuition plan where essentially you're buying or paying for college credits at today's prices or whatever the year is that you're purchasing those. And then there's actually the 529 plan that's the education savings plan where you're actually putting money into an account. It's typically made up of mutual funds or something like that, and that money is invested. And so you've got some exposure there. But typically what I've seen, Anthony, tell me if you think differently, is that most of the time is we're talking about the education savings plans.
Sure, yeah.
When you're meeting with somebody. And so I think that a bulk of today's conversations is really going to be highlighting the difference between the education savings plan versus whole life insurance or IBC.
Yeah.
Awesome. One thing I will say before we get started too is that I did just have a little slip up there is we're not comparing 529 plans to whole life insurance. Right?
What are we comparing?
Good question. We are comparing it to the infinite banking concept is because, again, what we tell everybody is that the policy only provides about 20% of your returns, and the process, which is borrowing against that policy and using those dollars, turning those dollars, is going to provide 80%. And so we are intentional on the wording that we're using. This is not a comparison against whole life, but it's a comparison against the infinite banking strategy.
Perfect.
Awesome. Well, let's get started. We got what we're going to do is we're going to go through and talk about some of the features and compare them. So, Anthony, what do you think we get started with the funding feature?
Let's do that, right? Because let's talk about the money.
Yeah.
And as we're going to talk about, we try. There's pros and cons to doing everything, right? Mm-hmm. And infinite banking is no exception. So we're going to share some of the pros of 529 plans.
Yeah.
Right. And some of the cons of infinite banking. But if you're listening to this, you kind of know where we're coming from. But we're going to try to present this in an informational way. In regards to funding, there's a lot of advantages to the 529 plan. And by that, what I mean is that there is no structure. You can put in a large amount in 1 year and nothing for 10, and then put in a large amount, or like the funding can be really anywhere. I mean, there are some limits,
yeah,
but there is no minimum. I mean, so that in some scenarios is definitely or can be an advantage. With infinite banking, since it's a whole life policy, there is going to be some maximum and minimums, meaning that there's going to be at least a minimum premium required. And there's also a max. So if you have a large windfall, you may not be able to put it all into the kid's plan.
Good points. Good points. I would say that the flexibility of that 529 funding is definitely a pro in favor of that. I will add right there that there are no contribution limits as far as kind of the policy goes. So somebody could potentially put in as much as they wanted to with the whole life, but once you get it structured, there are some limitations there. Awesome, Anthony. All right, so let's talk about how money is earned inside of each of these accounts. Some of the investments, and then also some of the risks that are associated with those.
Well, with 529 plans, I mean, they are sponsored by each state. Now, so they're going to give you options of what you can invest on, kind of similar to a 401k, right?
Okay.
You have your 401k plan, and you have certain funds that you're able to invest in. So what you're going to invest in is going to be limited to those funds. And typically those funds are going to be in our category of our hierarchy of wealth is going to be something that's in the speculative tier, meaning there's no collateral, there's no certainty, and there's no control.
Yeah.
Now, with infinite banking, there is a minimum. There is a guarantee. right? So inside the product of the policy, there is a minimum cash value that's going to go up every year.
Yep.
In addition, well, I mean, compared to 529 plan, since that's in the market, that can swing up or it could swing down. And unfortunately, and I know I've shared on our podcast multiple times what happened with my kids. We actually had both types of 529 plans. And in regards to the investment savings plan, my son lost 60%.
Ooh, ouch.
Right? When he's about to go to school in 2 years. Right? Now, my daughter was lucky. She only lost 50%. Okay, so you have that risk and that uncertainty. And right now, we're recording this in April of 2021. I think there's even a lot more uncertainty of what's going to happen to the stock market in the next couple of years. But now with infinite banking, we have the policy, right? So there's a guarantee floor in there, okay? But there's also maybe the additional growth inside the policy. But here's the thing with infinite banking, you can invest in anything you want. Like we're often saying that infinite banking isn't an either or. It's not put your money in life insurance or real estate or a business. This can be both, right? This is an and asset. So you have the ability to leverage your policy to make cash flowing investments. Like, and I'm trying to make what we're doing with our kids an open book. And like with my daughter, we're about to close on a rental property next month. Also, she's helped fund, we started a flipping land business. So because she had that extra money there that wasn't tied in, she's able to use it and put it to work. And as many of you know, I'm recently a grandfather.
Congrats.
So, thank you. I will be putting a policy on my grandson, just like what Nelson had talked about in his book, right? It's just kind of taking care of that next generation. And then my son's obligation will be to put a policy on his grandkids. But so we're going to have that policy for him, but I'm not going to just let that money sit there.
Yeah.
I'm anticipating at least some rental properties. I mean, ideally, so if I can buy a rental property when he's 2, right? Imagine how much cash flow that's kicking off when he's 22. So the investment options using infinite banking are really infinite.
Absolutely. And again, if you go back to that speculation tier for us, is how many people really understand mutual funds, Anthony?
Not many, and I'm including financial advisors.
Absolutely, right? And when we talk about whole life insurance and having that cash value, Anthony mentioned, you can invest in anything that you want to, which is true, but our advice, again, is always going to be invest in what you know, right? And so I want to make that distinction there. Great points that you made here. Let's talk about maybe some of the uses that you can use these funds for.
Now, this is where it gets a little more particular because 529 plans, you can only use it for certain things. Now, when we had talked about earlier about the 2 different types of 529 plans, one is the prepaid tuition. Only thing that one's going to pay is going to pay credits. It's not going to pay for books. It's not going to pay for fees. It's not going to pay for room and board. Okay. Now, the other type of the educational savings, you can use it for required expenses by the school. So that will include the fees. That will include room and board. Okay, and it'll only include a laptop if it's required by the school. So I think what's going to happen is there's a lot of expenses that they don't cover. For example, they don't cover insurance. So car insurance.
Yeah.
If they're renting an apartment, it's not going to cover the renter's insurance. It's not going to cover their car, or their transportation, not just to and from school, but look, if you send your little kid away to school, you're going to want them to come back quite a bit, right? So you have all of those flights, not just on the holidays, but you're going to get that call. Hey, Daddy, you know what? I'm homesick. Okay, let's get on a plane and let's come home.
Yeah.
You know, so there's all those additional expenses. Also, if they're in an activity in college, like I was in a fraternity, and my daughter is in a sorority, that's not covered by the 529 plan.
Right.
Okay. Anything you want to add on that?
No, those are called qualified expenses, right? Whole life insurance does not have these required qualified expenses for you to be able to use that cash value. And I would see that as certainly as a benefit in favor of whole life insurance or IBC is, man, you can use that money for anything that you want to or need to. Yep. Awesome. Let's, what else we got? What if a child does not need it, Anthony? What happens in that case?
Well, a lot of times I try to have this conversation with my clients, and it's not always received well. But I'm trying to be honest. Not every kid's going to go to college. Okay, so I know, and we're going to probably go more into my story, but I was telling Cameron as we were prepping for the show, I wish I wouldn't have done this, but when my son was younger, I would tease him, and not that I don't mind teasing him, but what I would say is, hey, Chad, if you don't go to college, Daddy's buying a Porsche. I meant it in jest, really, just trying to push him to go to college. But looking back, like I was kind of setting the tone like he had to go to college.
Yeah, it was a requirement.
Right? Yeah. And I think nowadays things are changing now. And so not everybody is made or built to go to college, right? Or like for me, I went in the Army, and that paid for my way for college.
Yeah.
So I didn't need the 529 plan. But if you don't need it, so here's a couple things you can do is you can change the beneficiary, meaning instead of it being on your son, well, you could transfer it to your daughter. Okay. Or someone in the immediate family. Okay. But what happens if you can't do that? Or maybe there isn't a beneficiary available. Also, what if they get a scholarship?
Yeah, great point.
Now, if they get a scholarship, one thing that is nice is what they will do is you can withdraw that money from the 529 plan and not pay a penalty, but you will have to pay tax on the gain. And because the problem is, if you don't use that for the qualified expenses, you're going to pay any tax on the gain, and that gain will also pay a 10% penalty. So it's kind of similar if you take an early withdrawal from an IRA or 401k. But if you have a scholarship, they will waive the penalty, but you are paying. You're going to pay tax on the gain, but also here's something to remember: the tax on that gain is going to be at the highest rate, which is your ordinary rate. Now, if you would have just put that money and had it invested in the market, invested in the same mutual funds, that gain is taxed at the lowest rate, which is a capital gains rate.
Good point. What I'd do is I'd jump in there and I'd say something very similar, right? Is this question comes up often when talking to clients, and I look back at my personal scenario is I had two sisters, right? And not all of us graduated from college, and I've got three kids, and the likelihood of all three of my kids actually going to college and graduating is probably not very high. And so I see a much bigger benefit in having money in the policies for me personally. And I look at that as, man, we're talking about buying cash flowing assets and starting a business. I would much prefer to have cash available to potentially give my kids for seed money to start a business than I would wanting it locked up in some sort of 529 plan.
So, Cameron, what if they did want to go to college? All three of them.
All three of them. Now I've got a whole bunch of money in cash value in my policies that I am now able to use for tuition. With no implications, no nothing.
So that's what I like about it. It's the flexibility.
Yeah.
If they don't go to college, I mean, what our take was is that you had to be educated.
Mm-hmm.
That education does not need to be accomplished through a traditional 4-year degree. If you wanted to become a realtor, or if you wanted to learn how to invest in real estate or start a business, that's going to take some money.
Yeah.
Seed money to start the business, but also to pay for the education, right? And so with the infinite banking concept, there are no strings. You know, one thing I did want to point out that we didn't put in our notes was, I would say, another advantage and disadvantage of using infinite banking. And
what would that be?
What I would say the disadvantage would be is if your student is maybe a few years before college, meaning that because as we said earlier, like there's pros and cons to doing infinite banking, and probably one of the biggest cons is what we call that slow start. Right at that beginning, you put in $1, you don't have access to the full dollar. And so if we're comparing bang for your buck, 529 plan versus infinite banking, 529 plan may have more money, like maybe if we're a few years away from college, right? So, but also another advantage of infinite banking is, since we're using life insurance, we're locking in the insurability and the death benefit for our kids, right? As you know, both of my kids had some medical issues, and one of them, my daughter, she can't qualify for life insurance now because of those. So fortunately, because we got those policies so long ago, that she has some death benefit. So it's kind of hard to put a price or do that comparison, you know. But so let's talk about after college.
Okay.
Right. So let's say they go to college.
Yeah.
Right. So how does that look between the two, Cam?
Yeah. If we compare those, the 529 plan is, I mean, you're geared up to pay that tuition. And the whole intent behind that product is to pay that tuition. And once that tuition gets paid, is that account's over with, right? It's done. As Anthony likes to say, the party's over.
Exactly. Yeah.
Right? There's nothing left to do. That's it. Right? If you compare that with the infinite banking concept, and you've kind of taken a loan against that cash value, is, man, it's just getting started, right?
I say the party's just getting started.
Absolutely. Anthony likes to say after college, your real education is just beginning. But what you've got is you still have this asset, right? Even if you've taken all the cash value as max loan against that policy, man, that thing is still going to increase, going to have a guaranteed increase the following year. You still have an asset. And if you're teaching your kids properly, now they have a place to either start putting money away once they graduate and start that first job, and they're going to start saving. They got a great place to put money into that. And even if they don't, like I mentioned, it's still going to increase. And so you've got an asset that you can still use. And for me, it provides a much better perspective on life than just focusing on just paying that college tuition, right? And so it's a much broader perspective when you're looking at using a policy in infinite banking to save for college.
And since I've had one child go through his education, and my daughter is graduating college next month, probably about the same time that this podcast is going to be coming out. To me, you know, we want to teach our kids to fish.
Yeah.
We want to teach them about money and how it works. Because I don't know how many times somebody told me, and this is how I felt, man, I wish I would have learned this sooner.
Mm-hmm.
Right? So if you're learning it now, you got an obligation so your kids don't say the same thing. Right? So we need to teach them how to handle money. Because with any of our clients, odds are they have more death benefit than they ever intended to.
Sure.
Right. And typically, it doesn't have to, but typically that money is going to the kids.
Mm-hmm.
So thus, we need to teach them how money works now when they have a little, So when they have a lot, they're going to know how to understand it. And what I did with my son, and I will be doing this with my daughter, is when he graduated, I had them read Becoming Your Own Banker. And with my son, I bought him a nice suit, so he could be ready for the world. Now thinking back, like, don't really wear suits too much anymore, but he's got a nice suit and a nice pair of shoes.
It's the thought that counts, yeah.
Right. And with my daughter, well, she listens to this podcast, so her present is coming. But but more importantly, what I did is I said, son, okay, now that you graduated, if you've read the book, what I'm going to do is you don't have student loans. You have something better. You have policy loans. The reason why they're better is because I told them, look, all of the majority of your coworkers are going to have student loans. So they're going to be paying them, probably for the next 10, 20 years. But are they ever going to see that money again?
Never.
Right? But with his policy loans, he makes that loan repayment. That just dollar for dollar increases the cash that he's going to be able to use inside his policy. And then instead of funding an IRA or 401k, now you kind of know our stance on those, right? But even if you don't agree, when you're 22, 24, you're in the lowest tax bracket you're ever going to be. So why would you want to start deferring it? Okay. So instead of putting money in the 401k like your employers are going to do, you start paying the premiums. And then when I see that you have earned that and you're going to be a good banker, I'm going to sign the policy over to you, which we're in the process of doing that with my son. So we're teaching them about money. And what I'm hoping is he's going to view he has some skin in the game, right? So that school wasn't just a gift for mom and dad, that he went and really paid it back.
Awesome. Well said.
Thank you.
Good points. I had one extra point down here that I was going to kind of make note of that I thought was worth bringing up. It was the cost of college inflation, right? We were talking about some of the...
I don't think that's worth bringing up. No, I'm just teasing. No, that's a very important... Sorry. That is a very important thing. This cost has gone out of control.
Oh, it's got insane, right? And I looked at this. It's got to be a couple of years ago now. Was the last time that we really dove into it with the client. And one of the conversations that we had was how quickly or how expensive college education is getting. And they had some young kids, so I was looking at kind of projecting out the cost of college, and the inflation rate on college tuition absolutely blew me away. Right, I think annually it was maybe 12% was the number, but I pulled up a Forbes article right before while we were preparing for this. Do you have any idea what the rate of inflation has been since 1985 to 2017, Anthony?
Well, are we talking consumer price index?
You're talking about college tuition inflation.
I mean, I know it's going to be higher, but I think what most people are thinking, well, inflation in general is maybe 2-3% is probably what most people would think.
Yeah. So I've got the statistics right here. This is from Forbes, August 31, 2020. College tuition is rising at twice the inflation rate. From 1985 to 2018, it increased 497% over that time frame. The bachelor's degree in 85 cost $5,500 per year. And in 2017, it cost $27,000. Those numbers blew me away.
Well, so I wonder, are the people now better educated than in 85?
No, they're not better educated.
Right. Well, I know, but like, that's just another sign is like, of all this money, this cost of college is just out of control.
I remember when I was in high school and I had, I don't know if I told you this story, but I was in college or I was in high school and I was talking to a family friend. He had a physical therapy office, and was what I thought I wanted to do. And I started talking to him, and I was talking about the amount of education that comes along with that degree. And he told me that he only went to college for 2 years to get the degree and to start practicing. And mine was a 4-year or a 5-year program. And I said, has medicine changed that much since you graduated? And he just looked at me just blankly in the face and goes, no, absolutely not. They just drug it out over 4 years and decided to charge you more. Right. And I'll never forget that conversation.
Well, that brings up the point is one thing I don't understand is if you get a degree to be a teacher.
Mm-hmm.
No disrespect to teachers, right? Or let's say a degree in marketing. That's 4 years.
Mm-hmm.
Okay. But if you want to get a degree in engineering or you want to be a biologist, that's also 4 years. I don't get it. Like, to me, to understand biology is going to take a lot longer than it would be to study marketing.
Yeah.
And all of these degrees are 4 years, whether psychology, accounting. I mean, they even have a degree in dance.
Oh, do they?
Yeah.
Yeah, you would know.
I would know. But all of those are 4 years, like the same time frame. Like, it doesn't, college is so expensive. It's taking 4 to 5 years out of somebody's earning potential. I don't know. I mean, it's a tough call, but so I'm not a big fan of everybody getting a college degree, but I will, and so that's my rational thinking.
Yeah.
Right. But having a kid, graduate high school, if she wouldn't have went to college, it would have been difficult for me. And I'm just being honest, even though logically I'm thinking college is not necessary, but there is that emotional side. There is, maybe that's through society, that there are those expectations, or maybe just all the razzing of Chad that I was going to get a Porsche if he didn't go to college. But I will say, and I had this discussion with my daughter when she's graduating. She's like, Dad, I'm not sure how these skills I've learned are going to transfer in the real world. And I'm like, I know.
They're probably not.
At least my rationale for her to go to college, not only to get the degree, but that independence. Like, she's no longer living with mom and dad. She had to cook some of her food. She really was totally on her own. And also, like, where we live, like, we kind of live in a bubble. Like, most people are listening to the same music, same income levels, kind of same diversity. Her going to college now, she's people from all across the country, or even the world, different types of music. So I think what she got from college is more than the degree.
I agree with you. Well said.
Well, so how about, let's talk about what I was referring to earlier, right? So I had 529 plans for my kids, and I'm glad I did, but I wouldn't do it again.
Okay.
So let me explain. We had two types of 529 plans. On the education savings one, as I had mentioned, Chad lost 60, Sarah lost 50. Okay, so really wish I would not have done that. Okay, and when I learned that, then I took the money out and I dumped it into a policy for them. Okay, but we also had the prepaid savings plan, and I remember when I was about to do that, my typical financial planner at the time was like, Anthony, instead of doing that, why don't you give me the money and I'm going to invest it for you, and I will have more money than what you're going to get from the 529 plan. And I told him, I go, you should, right? You should be able to outperform that. But I said, to be honest, by me doing the prepaid savings plan, I knew that no matter what happened, I can die or I can be bankrupt tomorrow. And I could know that my kids, at the very least, are going to be able to pay for college. So it's hard to put a price on that.
It is.
So with
Peace of mind.
those prepaid plans, at the time I was a fan of.
Mhm.
Okay, but now I wouldn't do it, and the reason being, for one, I think the higher education landscape is going to change. It's so expensive, right? And even now with COVID, people were doing everything online. And I think people were realizing, man, I'm paying a lot of money for something that I could just do online. So I could see some people not doing that, or the cost is going to go down, or something's going to change.
Yeah.
Like even Tesla now is specifically going after people who don't want to go to college. I mean, so I think there's going to be a huge change. Okay. So, but also, again, maybe they don't go to college. But one downside of the prepaid tuition is if you don't go to college, well, the good thing is you can get your money back. But the only thing you're going to get is your money back. So you're not going to get any of the gross. So right now, I think with the landscape here, I wouldn't want to tie into a 529 plan.
Great, guys. So what we just did there is we kind of went through the difference of 529 plans versus the infinite banking concept, and we highlighted some of the pros of each one of them, but we also highlighted some of the cons of them, and then we also threw in our 2 cents along the way. So I hope that was helpful for you. I hope you enjoyed this episode.
Go make it a fantastic day.
Take care.